Hello, welcome back to WINFXTRADING YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. This is your first time of visiting this YouTube channel. Do your best to subscribe and turn on the bell notification so you get notified each time I upload a new content. To like and refer this channel to your network so that YouTube will push us to a very high level of audience. Okay, in today we shall discuss a very powerful scientific idea that will actually help you to succeed in the Forex industry, especially anything that has to do with top-down analysis, structural analysis. Okay, you can also deploy this in stock market and the crypto market. So the topic is control block and bandwidth theory and Forex synthetic market. Okay, before I go to the practical part of this, I'm gonna start with some illustrations. Right here we have the P axis, which is the price axis, and then we have the T axis, which is the time axis. Now we are going to assume an arbitrary price geometry or trajectory, and then I'm going to explain what is actually how this topic actually want to change the way people view the market. Okay, if we have a market that have this wave, actually this is actually useful in a trending market. So this is an uptrend market. Now you have to draw two parallel lines bound, make sure they're parallel, bounding, like enclosing this price movement, so it becomes a closed system, meaning that all the forces within this parallel line actually act on the price movement, meaning that after the parallel line there is no energy, there is no financial energy, but within there are a lot of energy. So here there's conservation of energy, meaning that what I mean by conservation of energy is that the price actually restricts itself within these parallel lines, meaning that even if there are some scrapers just above this parallel line as you are drawing it, maybe some errors due to drawing, or you can maybe you cannot detect these errors and they exist, then they are going to be regarded as negligible. They are going to be so negligible, meaning that all the forces that actually control this price movement are within this enclosed parallel lines. Okay, yes, there is some ideology in my previous videos where I talk about external forces and internal forces, like that, especially when it comes to differential analysis in the market. So when I say conservation of energy, I don't want consider the external forces to be of importance, even if they do exist. Yes, they do exist in the market based on past events, based on historical events, but with respect to the conservation of energy, I'm just considering the price movement being controlled by internal forces, meaning these are forces you are seeing at the present and they are bounded inside this parallel line. Okay, so when you have understood this, that the energy, the only energy that exists with respect to this price movement is only bounded within this line, within these two lines. There is no way you will trade anyhow. Okay, there is no way you'll be afraid to approach the market. Now, after having understood this, let's go into the control block and bandwidth. But let's start with bandwidth. What is bandwidth? When you have drawn these two parallel lines, the bandwidth is a distance measured parallel to the impulse path of the price wave of the wave. Okay, so when you measure like this, make sure it's parallel. You see, this line I do is parallel to this. Okay, so when you measure this, measure it in P from here to here. That is the bandwidth. Okay, the bigger the bandwidth, okay, the slower the price movement. Why the shorter the bandwidth, the higher the more the price movement is going to be very, very fast. Okay, so when you have understood this, the next thing we need to understand is control block. Control block. So what is control block? You see, control block has to do with two turning points, high and low. So when you locate the major high and low and use a rectangle to mark it and shade that rectangle, okay, and extend it in the future as much as you can, okay, it becomes a control block, meaning that no matter how price struggles, is not going to trade against this control block. Yes, it can interact with its boundaries or its surfaces, but it cannot trade against it entirely. It can never trading against it means that as you know, this market is uptrend, and so if it started trading below it and change to downtrend, then it is trading against the block. So a control block is a controller, meaning that it restricts the price movement away from that block. So as prices are pushing this block, reactive signals will create like this one, and then the market keep going. So if we go to the practical, I'm going to make this thing more explainable. Okay, right here is GBP/USD. After this Forex asset, I'm gonna check synthetic. Okay, so this is a Forex asset, GBP/USD. Right here, we need to actually get our close boundaries. So we want to know the trend. The market must be trending. So let me start from daily to see the trends in the market. Yes, with this I can have this, and then I can also have this. Okay, so I've defined the closed boundaries. So meaning that all the price movement is going to be within these parallel lines. Okay, now let me define my bandwidth. I'll go to line charts. So it should be the measure. I'm sorry, the control block. It should be the measure. It should be the measures turning point. So I'm using this high and this low here. Okay, the measure ones. Then I'll talk about the bandwidth also. Okay. Now this bandwidth is measured in peak. I hope you know. So draw a parallel line from, because it should be the bandwidth is actually I think, even if I didn't say this thing in the theoretical part, the bandwidth should be a function of the pullback. Yes, not actually the retracement, not actually the impulse. The bandwidth should be a function of the pullback, not impulse. It should be the function of the pullback, okay, or the retracement. So measure this retracement, okay, from a high to a low. When you measure it, to do it, you draw a symmetrical line that models the retracement action. So, and then let it pass through let it touch the other boundary. So from here, you measure from here down to here. So this is around 2000. Oh, this is around 237 pips. So the bandwidth is 237 pips. What it's trying to tell you is that on average, the market can pull back by 237 pips. Okay, so if we go to frequency analysis, you have to find the frequency of these closed boundaries like the frequency of the price action within this closed boundary by using the high level mathematical formulas, which I'm not going to show in this video, because frequency is actually 1 over period, that is 1 over time it takes to complete a whole market cycle. I'm not going to, it's very complicated stuff, but having this knowledge will make you to be strong in this market, right? So now we know our bandwidth is over 200 pips, meaning that the market have to pull back by 200 pips for we to do what? Get a new, like to actually get an accurate new impulse, right? But this is not a practical validity of how to get the impulse, but know that the bandwidth is a measure of the retracement from one boundary to the another boundary, but not the impulse. Okay, so now why did I focus on retracement as a measure of, to measure the bandwidth instead of the impulse? It is because it is this retracement that bring a kind of psychological issue that, oh, this market is actually trying to change trend, whereas the retracement, if you are a sophisticated trader, the retracement should be invisible. You should not be seeing it. Like, yes, it's there, but you have to assume it's not there, so that you focus on the long-term direction of that market. So what if you go to advanced physics, what is bandwidth? You see, bandwidth actually means range of frequencies, like it's a kind of range of frequencies for which certain signal can be relayed, for which certain signal can be transmitted. Okay, so there should be range of pullbacks for which a new impulse will be transmitted. So what the information the market want to transmit is the impulse, is not the retracement. The reason is because, let's say you are actually a serious trader with a physical forex bureau, with a physical forex bureau, and then for over 10 years you discover that the rate is actually within certain range. Let's use what is happening in Japan and United States. You see that one United States dollar is around 140, this is revolving around 145 Japanese yen, and it has been like that for more than 5 years now. Okay, so like now if you go to certain higher time frame and you study why it is so, and you're able to measure the total pips required for this pullback, or for market to escape this price to go to a very new regime price where it will never see this type of price again, that is a measure of bandwidth. Okay, so now when you know this and you know your control block, then you can be able to trade, you can be able to become a very strong swing trader and positional trader. Okay, now what I'm trying to say here is, now that we know our bandwidth, there is nothing will make me to sell in this market again. Yes, because first of all, this bandwidth has completed, because there is break of structure. The market created a block, like the market break a block and is creating a new block. So when you, this topic is very big topic, but I'm going to shorten it. When you run your volume and area analysis, you discover that for a new pullback to start, because this one has completed, the market will at least create areas and volume bounded by previous impulse and their pullbacks and their retracement. The market have to create areas and volume that is either equal or more than the previous ones, and these areas and volume are measured based on the impulses and previous impulses and pullback. Now what I'm trying to say is that if you are selling in this market near the lower boundary, you are wasting your time. So near the lower boundary, discrete probabilities become activated for buy. Like you buy probability start existing, whether you like it or not. It appear in your mind if you know what you are doing, right? So right here you'll be looking for buy. So what the control block is telling you, which I have done, which is this big rectangle, is trying to tell you that the market is still bullish so long the price action have not violated this block. It's still bullish, it's still buying. And so when you step down to the lower time frame, you will see the reason why you should buy. So you look for strong support level. You discover that near the lower boundaries where there are probabilities of getting a new impulses, you discover that you can easily see probability for buys. And then to confirm it, you see this sell action, this sell cycle, market have broken it, create emo structures or W structures and break out of the W structures, and then create this strong support. If you are watching this video right now, make sure you enter this trade. Yes, I'm going to trade it and show you the result later on the live account. This is a very strong support. You enter the market. You don't need to wait for you to pull back again. Once prices are within or within or very close, or even if a little bit away from where it's supposed to be entered, you can still enter that market so long your SL is positioned where price can never get to. So you see, you can deploy block control stuff in the line chart, and you discover that you will enter this market here and put your stop loss somewhere here, because there are blocks that have been completed, so you can put it here. This is around 20 pips, and you are going to target. See where you are targeting. Yes, even though you can take some of your profit in the middle, but the rest you can hold it long time, because based on the bandwidth, there is this mathematical relationship that model the impulse and retracement, which I'm not going to talk about in this video. But at least the next impulse will be either equal to the previous impulse or more than it. So you can just use a parallelism method, and trace it back to the upper boundary, because that is where there are probabilities of reversals. So you see, in most cases everything will be mathematical. You may not be able to do this thing, so you can use maybe ×2 of previous impulse or ×1.5. Okay, so thank you and bye for now.